You can experiment with your investments. Choose the stocks you like one by one, or select Sector Spider ETFs and add the diversification of an entire sector of the S&P 500, like healthcare. With liquidity, all-day tradability, and transparency. Ready to add diversification to your equity investments? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
When measuring investment performance, the biggest mistake people make are number one, not tracking performance at all, or number two, comparing an investment portfolio's performance to flawed yardsticks. Now the first point should be pretty self-explanatory, so let's focus on the second point. If a certain investment portfolio holds an asset mix of 25% US stocks, 25% bonds, 10% international stocks, 10% real estate, and 30% cash, how does comparing its performance to an irrelevant 100% all-stock benchmark like the S&P 500 lead us to a relevant conclusion? The answer is it doesn't. The right way to measure the previous mentioned portfolio's performance is by using a blended benchmark. Now, how is this done? Well, simply by comparing how each portfolio's overall asset exposure performed against its relevant passive benchmark over an identical time frame. Now, taking the sum performance of the portfolio's various asset classes versus the sum performance against the corresponding blended benchmark renders a precise and accurate picture of investment performance. Ta-da! Question: why don't hedge funds, why doesn't the mutual fund industry, and why doesn't the rest of Wall Street measure performance using blended benchmarks? Is it to purposely distort investment track records to make themselves look better by comparing apples to oranges? And if that's true, and we know that it is, why do financial regulators like the Securities and Exchange Commission tolerate Wall Street's subversive and illicit practice of rogue benchmarking? Let it be known, the flawed tactics for measuring investment performance is a widespread problem. Today's financial services industry, it reminds me of the medical field in the 16th century. You'll recall back then they tried to categorize people according to how their faces looked and to which animals they most resembled. Now this produced, as you might imagine, a very bizarre and creepy outcome. But it's not that much different with how Wall Street incorrectly measures performance. So don't make the same mistake. If you're still confused, don't be. Ron DeLegge's Portfolio Report Card that you receive when you go to portfolioreportcard.com always judges your investment performance against the right yardstick and over the same corresponding time period. Remember, blended passive benchmarks that approximate your portfolio's asset mix isn't just the right way to measure investment performance, it's the only way.